How can you invest in mortgage-backed securities? If you have ever wondered how to invest in mortgage-backed securities, you are in the right place. Let's break down what these securities are and how you can get involved. Mortgage-backed securities, often referred to as MBS, are investment products backed by pools of residential mortgage loans. When you invest in MBS, you are buying a security that allows you to receive payments based on the mortgage payments made by homeowners. To understand MBS, it is important to know how they are created. They are formed through a process called securitization. This is where many individual home loans are bundled together and sold as a single security. As homeowners make their mortgage payments, you receive monthly payments that include both interest and principal. Unlike traditional bonds, MBS pay down principal gradually, which can affect your cash flow. Now, let's look at the ways you can invest in mortgage-backed securities. One option is to make a direct purchase of MBS. This is typically available to accredited investors or institutions through brokerage accounts. Some MBS can be bought for amounts under $25,000, making them accessible for many investors. Another option is to invest in mortgage-backed securities mutual funds. These funds pool money from many investors to buy a diversified portfolio of MBS. This approach provides easier access to MBS for individual investors without needing large capital or extensive market knowledge. You can also consider exchange-traded funds, commonly known as ETFs. These funds trade on stock exchanges and hold a portfolio of mortgage-backed securities. They offer liquidity and diversification, which can be beneficial for your investment strategy. However, investing in MBS comes with risks that you should be aware of. One risk is prepayment risk. When interest rates fall, homeowners may refinance their mortgages, leading to early repayment of principal to MBS investors. This can reduce your total interest income. There is also extension risk. If interest rates rise, homeowners are less likely to prepay, which can extend the duration of your investment. This may cause you to miss out on better yields elsewhere. Additionally, you should consider credit and market risk. While many MBS are backed by government agencies that guarantee timely payments, the performance of MBS still depends on the health of the residential real estate market and the credit quality of borrowers. Despite these risks, there are benefits to investing in MBS. One of the main advantages is the steady income stream. You receive monthly payments that combine interest and principal, providing a predictable cash flow. Mortgage-backed securities also often offer higher yields compared to United States Treasury bonds. This makes them attractive for income-focused investors. Furthermore, MBS returns tend to have low correlation with stock markets and corporate bonds, which can help diversify your portfolio. If you are ready to start investing in mortgage-backed securities, here are some practical steps. First, open a brokerage account if you do not already have one. Next, decide on your investment approach, whether it is through direct purchases, mutual funds, or ETFs. Research the types of MBS available, paying attention to factors like mortgage terms, credit quality, and interest rate exposure. It is also important to consider your risk tolerance, especially regarding prepayment and extension risks. Once you feel informed, make your purchases through your brokerage or invest in funds that specialize in fixed income or mortgage-backed securities. Lastly, keep an eye on interest rate trends and housing market conditions to manage your investment effectively. Investing in mortgage-backed securities can be a smart addition to your real estate investment strategy. With the right knowledge and approach, you can navigate this market and potentially reap the benefits.